Ladies and gentlemen, welcome to the 100th episode of Couchonomics. This episode is special for me, especially special for me because I've got Roelant Prins, who's the Chief Commercial Officer of Adyen.
We have the best technical solution here. It's going to make life so much easier for everyone. Why wouldn't everybody be very, very excited about this? The change in payments is fast, but at the same time, it's very slow.
I used to always say that I think e-commerce is now, as a term, to me, redundant, because you can conduct electronic commerce in the shop, right? There are a few of us who might say it's incredibly frustrating, but no, for the little I know you, Roelant, I've met you 2 or 3 times. You are a half glass full kind of guy.
The easier you can make it for people to complete a transaction, that still has a long, long way of making impact.
Ladies and gentlemen, welcome to the 100th episode of Couchonomics. It's been an enjoyable journey. Where personally, I must say, I've learned a lot, made some great friends, right? This episode is special for me, especially special for me because I've got Roelant Prins, who's the Chief Commercial Officer of Adyen, who's unfortunately not on my couch, but actually online on this show. But before we get into the show, I owe Adyen a big thank you because they've been part of the journey from when this show was conceived. They've been sponsors, partners from day one. And I think without their support, I don't think Couchonomics would have become a reality. And I say that honestly, not because Roelant is sitting here. Also, I must mention that Roelant and I did a very, very interesting episode about 1.5 years, 2 years ago, where I flew up to Amsterdam. And we recorded this episode while walking down the streets in Amsterdam, and most of the world was wondering, what are these two sort of, if I may say, average-looking guys with these 6 cameras following them around? But that was quite an experience, and I think it still stays as the most unusual episode. But enough said. Roelant, welcome to the show, and thank you
Thanks
for coming.
Thanks so much.
Thank you for being here.
No, glad to be there, and feels like yesterday when we were walking there with a few microphones above our heads and just chatting away on the streets of Amsterdam. That was great, and great to be back. Congrats on a fantastic ride since.
No, thank you, and I really think it's been an amazing journey. I must make the point. I think it was the one day where you had glorious sunshine in Amsterdam, because that was one of the things we were worried about, is that are we going to get on the street and is it going to start pouring down in the rain? But I didn't get Roelant, getting into the conversation, right? Since we last met, right? There hasn't been a day, there hasn't been a minute where we don't read something around the world of payments, right? Whether that is from Europe, whether it's the Middle East, so on and so forth, right? So a lot has changed. A lot is still the same, if I may use that term, because the legacy businesses still are there and they're thriving and they're still continuing to make tremendous amounts of money. But I'm very keen to hear your views on how do you see the payments landscape today, specifically, especially in the last couple of years. How do you think it's evolved? What are some of the interesting dynamics that you see?
Yeah, no, it's first of all, I totally agree with there's so many innovations happening right now, but at the same time, there's a lot of things that are still in place like they were 20 years ago. It feels like if you go to countries like Japan or you go to Germany, like cash is still very very prevalent, for example, and it marks a bit that. Change in payments is fast, but at the same time, it's very slow. And with that, I mean that, what's fast is all the innovation that's coming to us. This phone has changed how payments are being made fundamentally over the past 10 years. Whereas payments are everywhere. So payments are also with lots of companies that have been operating for decades, and for really large retail customers, for really large hospitality customers that we work with, to make changes in payments is really, really hard because payments is so embedded in their entire infrastructure that runs their business. That might be a booking system that was built 20 years ago. It might be a cash register system that was 15 years ago, and you can't just change that overnight. These things take a lot of time. and are really impactful. So the pace of change to spread across the core of these companies' infrastructure, is slow. And on top of that, there's culture. And culture plays a big role in the adoption of payments and ways to pay, and especially change. I spent a week in China a few weeks ago, and of course the pace of change in China around payments has been like unlike anywhere else. Really with phones and wallets replacing very old or non-existent infrastructure. Whereas if you go to countries across Europe, there's, my expectation was post-COVID, hey, we're now starting to see many more QR codes being used, which is something that happened. But it's already, slowing down again, because we're falling a bit back to our old habits, which is we want to pay in the way we're used to. Dutch people, we don't like credit. And these things don't change that quickly at all. So it's a very interesting dynamic of lots of innovation, but also slowness, and that makes it super interesting to navigate.
I love your positive.
It'll continue for a while.
I love your positive attitude. It makes it interesting, right?
Yeah, it's super interesting. Yeah.
There are a few of us who might say it's incredibly frustrating, but no, for the little I know you, Roelant, I've met you 2 or 3 times. You are a half glass full kind of guy. So
no, for sure. But the thing is that. If I would run and introduce a new payment method, hey, that's going to be quite frustrating, because you can think about it, and we see this all the time. We have the best technical solution here. It's going to make life so much easier for everyone. Why wouldn't everybody be very, very excited about this? And then suddenly all these unexpected barriers appear. Merchants love it, but they can't implement it. Consumers, they find the privacy side of it a bit maybe not for me. So there's all these things that you got to deal with that make it really hard to launch a payment method, for example. And especially if you don't have reach, there's no merchant that wants to accept it. But if merchants accept it, then nobody's going to use it. So it's really tough.
So I'm going to peel this onion a little bit with you, right? So we're going to take this a little bit deeper in the conversation. I think you mentioned 2 very interesting segments which interest Adyen, right? And the wider payments landscape. One is the customers, people like you and me. Possibly if it's cross-border payments, it's something else. And then there's the merchants, right? Which is the businesses. So if I ask a question to you, in terms of, let's look at the people who are more willing to adopt and evolve, right? Rather than the ones who have been resistant to evolution. For the ones who are more willing and open to evolution, what changes in needs have you seen, right? From customers? You mentioned privacy is one interesting one, because, it's largely with those people who are wanting to move, but privacy is a concern for them. And similarly, from a merchant's perspective, one of the areas, because I come from a merchant's background, as you might remember, because that's kind of how I actually first associated with Adyen before I came back into consulting, is, I call it nothing short of madness in terms of the number of form factors, formats, and types of payments I'm now supposed to deal with, right? And it's getting harder and more expensive, to be honest with you. What are you seeing? What are the 2 or 3 things for consumers and merchants that are emerging as clear needs?
Let's start with the consumer side. I think every country is different, but I think across the board you do see that simple things like convenience, frictionless, these sort of words continue to be very important. So the easier you can make it for people to complete a transaction, that still has a long way of making impact, because of course there's certain countries where people care a lot about, of course, security and privacy, but if you make it really easy, and that's simple things like, if I make a payment, the payment method I used last time is there with as much information, pre-populated, I will use that. And people think about it yourself, like how often does that happen, especially with one-off type purchase? There's so many companies that still have so much work to do to get there. This is what people are looking for. And so it's convenience combined with personalization, in my opinion, that is still the most impactful thing that people are looking for, consumers that will draw people to come back. I strongly believe in the concept of loyalty by convenience. Just to, if you make it personal, if you make sure that your address is there, all the data is there, you just know, like, tack, it's simple, I'm gonna come back. So that bar is still very high, and there's not enough companies doing that. So you can outcompete competitors on that. Loyalty by convenience. I think in payments that's a really big topic. Now, if you go to the other side of the merchant side, what matters there, and what are the trends that we see? Of course, they're always looking to enable this. That's clear. So merchants tend to be very interested in any sort of innovation you can bring that makes a payment easier to complete and faster. We're seeing still plenty of merchants, for example, where in-person payment, we can make a transaction go 2 seconds faster. Well, that's a huge impact, especially with retailers that see a lot of people in their stores. But a completely different topic that consumers don't care that much about, but has been a big deal, especially in the digital space over the past 2-3 years, is cost. Cost of payments infrastructure. So to ensure, like, combining, how do I get the highest number of successful payments, of course, by supporting the right payment methods and everything. That's a big deal. But now more focus has been around, how do I now bring costs down, and what can I do about it, where that is driving more decisions about which payment methods do I offer to my customer, but also when, like high value transactions, maybe I offer a certain payment method based on banking infrastructure that has much lower cost rate. In quite a few countries, we've been developing something we call intelligent payment routing, where you have the ability to route payments over the international card networks or over local debit networks, which trigger lower cost. And if you're able to do that, there's lots of interest in that. For the consumer, it doesn't really matter. They don't care. It's really about optimizing, bringing costs down, which is, I guess, logical in how the economic climate's gone for merchants. But it's been a big topic there. We spend a lot of time on it, have had a lot of demand for, so to say.
And I agree with you. So taking that innovation, I'm going to go a bit lower now. Got two areas, two interesting sort of, if I may say, trends which are emerging. One is more specifically around sort of our favorite brand here, Apple, right? So earlier in the year, Apple launched, I think it's called Tap to Cash P2P money transfer, where you and I could tap our phones and move money across, right? So that's all well and good. That excited a lot of people, and LinkedIn is full of these pictures where things are going from one app to another app, and everyone gets quite excited. But where this gets interesting to me is that their intention is to extend that to a merchant, right? Because at the end of the day, P2P, P2M, what's the difference, right? At the end of the day, it's just it's basically the merchant on record or the name on record. How do you see this disrupting? I'm not so bothered about the P2P in the consumer side, but the P2M side. How do you see that sort of disrupting the offline payment world, right?
Yeah. We're seeing big impact already, because basically what the technology does, it's turning this phone into a payment terminal to accept payments from anyone, really, and that is offering a lot of benefits because it does two things. Number one, of course, it's nice that you have a phone that everybody carries that you can use to accept payments. It's something I can carry around in my store, so that it brings flexibility of accepting payments instead of having this fixed counter at the end of the store where everybody lines up, which builds on the trend that you see in a lot of retail stores. They're moving very much from these transactional stores towards more experience type stores where there's more personal attention to people, and hence a personal way to check out is much more convenient. But in all that,
Roelant, can I ask you a question? Sorry to stop you midway. MPOS has existed for a while, right? I've been talking about 5 years. Why is this so much more significant?
No, the thing is, what this does, that's the other thing that's also with Android. You can run apps on the device. So instead of a standalone payment device that I can use to put in a number and then you take a card and thank you, approved. No, now I can run everything. So I can run my the app that runs my entire store, that has all my customer data, that collects customer data, that has my product data from which I can send products to your home, or I can capture some of your personal preferences. You're combining everything in a mobile device. It's much more convenient. Plus, it really builds on the theme in retail, which is all about personalization. That's what this is enabling, and that's huge because everybody is looking at how can we make the future of retail. Why do stores have a future? It's because of relationships, and you need to have this sort of information to do that well, and that's what the real what I find the real benefit is.
Yeah, no, I personally think if this takes off, having come from the world where we used to have thousands of stores, and we were all shifting towards, as you said very correctly, an experiential sort of environment. I used to always say that I think e-commerce is now, as a term, to me, redundant, because you can conduct electronic commerce in the shop, right? Because the classic way was card present, card not present. That's how we used to oversimplify life, right? For me now it was, well, it doesn't make a difference if it's card present, card not present, because you can actually let someone check out at the store at the till, which to me is as good as an e-commerce transaction, because to be honest, I don't necessarily need to see the client and speak to him or her. And yes, relationships are important, and experiences is where we should be focusing on. So that's quite interesting that you make the point, because I do think that if this takes off, I think the traditional ECR / traditional payment platforms, I think they will have a challenge in terms of the hardware providers, because how much longer could they survive? Let me come to the complete opposite side of the spectrum, right? So I was in India 3-4 weeks ago for an event which was called the Global FinTech Festival, which is hosted by the Reserve Bank of India and NPCI. NPCI obviously has this juggernaut called UPI, who are actually processing crazy. They're processing 500 million transactions a day, right? You obviously have Pix in Pix in Brazil. And you have a number of other examples of these, I guess, if I may call them domestic public infrastructure players who are coming. And yes, they're coming from a view around financial inclusion and digitization of the economy, but they've used payments as the use case, and correctly so, right? Because you bring them on. But they have a massively disruptive impact in terms of how the payment landscape evolves. Now, I'll tell you my view, and please choose to disagree with me. This is my hypothesis. A lot of people actually turn around and said players like this have destroyed innovation in payments. I personally think it's the opposite. I think what they've done is created an underpinning layer, right, which gives a certain assurance in terms of transaction volume. And now payment players can actually innovate on top of that platform with all kinds of stuff, right? That's I've oversimplified my answer. How do you see that? Because if I speak to the cross-border payment players, they're concerned because if you start connecting these digital public infrastructures, even on a bilateral manner, forget Project Nexus, which is quite a complicated piece, you then start impacting cross-border payments, which is actually quite a rich business, right? Because there's lots of inefficiency and lots of friction, which creates cost. How does that translate for Adyen and players like you? How do you see this happening? Because more and more countries want to go down this public infrastructure, right? Whether developed or developing. How do you see this?
No, how do I see it? I think, we look at the impact that this makes. And as you say, the adoption's been phenomenal. And our merchants, they rave about it because of acceptance, cost levels, that the way they function. Very, very welcome innovation. And I think as there have been central initiatives, that's been a core reason why they've been successful. As what we said earlier, like chicken and egg in launching payment methods, it's super hard. So having these central initiatives, I think, has been instrumental to making them a success. I think there's also reasons why there was a need in the countries where they have been launched, like in Brazil, like in India, because what are the alternatives? There's such a need for this sort of innovation. That doesn't mean automatically that this is going to be everywhere across the world. I mean, you won't see something like this on the short term in the US. I mean, there's such an established infrastructure. You won't see something similar fly quickly in Europe because everybody's different and all the different infrastructure that's running quite well. And I think we've seen the same thing with, as I said earlier, QR codes that are thriving across APAC and China, especially. There's such a clear reason why wouldn't this work in Europe? Well, the technology is there, everything is there, and still it's not taking off. Simply because people are used to something else and it works okay. So there needs to be pain to be solved. There needs to be a very clear need. And yeah, there's so many differences across the world that, yeah, from our perspective, if it helps the consumers, if it helps our merchants, hey, we're the first to adopt it, support it, and make it better where we can.
So Roelant, your role is then, what is Adyen see? So I remember Brazil is a big market for you, right? My good friend Sander, who actually came here to run the Middle East, actually came from Latam, right? He came from Brazil. Yeah. And I remember for the first 5 to 6 months, he thoroughly educated me about everything going on in Brazil because I had no idea. Yeah. So what is Adyen's view? Adyen's view is fine, great, Pix exists. We build something on top of Pix. We build something alongside Pix. In the simplest form, our role is to, our customers expect to be able to support the payment methods that their customers want to pay with. Okay. And we choose to be in certain countries, and it's a lot of them across the world. And our role is to make sure that when these new payment methods come to the market, that we support them, that we integrate them, that we make them really seamlessly available to our customers, so that their consumers can pay with the way they want. So our role is really to bring together all these different payment methods and find ways to do it in the most successful way, making it as easy as possible. So the rails exist, and your role remains the fact that, if the adoption of particular rails is higher than the others, you just make it available. I guess the question which I won't ask, but I think becomes interesting, is that a lot of these are zero cost, low cost payment rails, right? So obviously they come with a certain challenge from an economics perspective, I would imagine.
Yeah, true, but exactly. So the question is like, what's the added value you bring as a company? And exactly. We are a global business. We have 200 something payment methods that we bring together. And we're not only relying on a payment method to bring a certain margin to build this business. No, we very closely look at what is the added value we bring. And there's one thing is clear. Well, the fact that if you support the 30 different payment methods to our platform, there's a lot of value in the unifying element that we bring, and a central, simple way of reporting, consistency. But there's so much more. We realize, in theory, and this is really theoretical, like in so many years, there would be only one payment method across the world. Yeah, that would be then problematic for us because, what is there for us to do?
Well, I don't think that's happening. I don't think that's happening.
So, there's a role.
If anything, we're seeing more and more of these closed loop payment networks coming up, especially with the blockchain players coming in, right? They keep talking about interoperability, but the cost of that interoperability is phenomenal. Now, you mentioned the word unified. 2 years ago when I met you, you introduced me to a concept called unified commerce, which I knew little about. There was no chat GPT at that time, so I had to go on to the internet to ask what unified commerce meant, right? And so here because I'd heard everything till omnichannel, I hadn't heard about unified commerce, and obviously I went and then I met the head of unified commerce in Adyen, who actually kindly met me the day after I actually interviewed me. He sort of told me as much as one could in an hour's long. How has the journey been so far as unified commerce? Is it merchants understand it? Are they being willing to? Are they really understanding the value that is created by unified commerce with all that value-added services? Are they willing to actually adopt, pay for those kinds of things? Is it a mixed bag? Have you seen it run in particular sectors better than others?
Yeah, no, that's it continues to evolve very much since. I think when we talked about it, I think we were still very much focused around retail in the sense of, the typical fashion retailers or the high street type retailers, which is where we've put a lot of emphasis in luxury or main high street type, H&M, etc. Where we've evolved is that we've been moving more and more into other industries. So hospitality's been an industry that's been much more warming up to this sort of unifying way of supporting customers and seeing the real value of a unified payment infrastructure to make things happen. So, think about check-in to a hotel. The whole idea that you make a booking in an app or online or you call, whatever way you do it, that you show up after a long flight and you have to go through that again. Like you have to pull out your card. Why is that? That's not necessary, of course. So we're working, and the reason is, they need the card because their physical and digital environments are completely separated. Now that's coming slowly. It's coming together, and by bringing it together, I can check in the app or I check in online. I provide my card details, and there's no need for me to do the whole thing again when I arrive at the front desk. Now I just go through to my room, and the key can actually be loaded on this thing now. So you're seeing that the technology is now reaching hotel groups, and they're really adopting more and more this sort of innovation. I must say that's not the fastest industry, but it's starting to happen. Other big area is in food and beverage. So we've been doing a lot of work with McDonald's, for example, and same thing. You've seen, of course, in a fairly short amount of time in that industry, that suddenly self-ordering terminals are everywhere. In like a number of years, it's changed completely. You see with the brands like Starbucks or others that the majority of people now order ahead on an app and then pick up in store. So let's say that the blurring of channels is continues to be a big thing in retail in general, but it's now coming to other industries. So it's much more to do.
So it's good to hear that, and I'm actually experiencing it, right? So I'm a customer of what you've actually seen, and I'm actually seeing these experiences. And I think you picked a very interesting sector, which is hospitality. It might not be the fastest adopter, but that whole concept of the unified experience is actually quite relevant, because if you're a patron of a particular hotel or a particular chain, or you're staying at a hotel for an extended period of time, you want that sort of unification in terms of your whole experience. Now, when I was with you, you'd also mentioned two very interesting areas where Adyen had expanded into. One was offline commerce, right, which is not sort of originally the pedigree. You were very, very strong on e-commerce, but because as a part of that unified, you felt you cannot ignore a very significant percentage of where actually the trade happened. How's that going? How's offline commerce or offline payment enablement heading for you guys? Any interesting stories, any interesting markets?
I mean, it's a huge growth area for us in general. And I think the biggest thing we've been doing is expanding our footprint. So we've launched Japan, we've launched Mexico, we've heavily invested in the US. And in all these markets, we are true domestic providers of our solution now. So where, of course, we're known for a lot of global customers working with us, but we've been really going deeper into these markets by supporting not only cards, but also the debit cards. But also in a market like Germany, we've integrated with the local gyro card network. So we're going deeper in these markets to make the proposition even more local, which then means we work with more and more local large companies that do a lot of traffic. So that's been a bit our journey since. And I think the beauty is that, at least from our perspective, from a company point of view, that in retail, in point of sale, physical commerce, gradually there's more and more dependence on technology. Data is a big thing in unified commerce, in physical retail. Like data, that's the way to understand the customer. That's the way I can give you a personal experience. But how do I get data? Do you provide your email address every time you walk into a store? No, probably not. Do we have beacons and everything? We talked about years ago. No, not really. what do? Well, actually, with payments, we can say, oh, we've seen you before. So payments can be a fantastic way to identify consumers, give much better insights into their behavior. Of course, within what is possible within the regulatory framework, but a lot is, and that is driving now a lot of this change. That suddenly, oh, we now see where people are coming from. We now can open a new store and actually see like how many people in this new store have actually moved from another store versus how many people did we never see. I mean, it sounds really basic.
No, but it's hugely powerful. It's hugely powerful.
We can give them that sort of information. So the data, from my perspective, in point of sale is a real core part of what we're trying to deliver, and
it's a whole new horizon. It's a whole new horizon because as retailers, we really never had a handle on that. So
no.
I'm obviously not going to be spared by your team in the Middle East if I don't bring the Middle East into the question, right? Very simple question. You've been in the market now for a few years. You've obviously seen, you've learned, you've evolved. You've landed some of the marquee clients, right? You stayed true to your sort of message and positioning, which is actually quite commendable because a lot of people dilute it and move things around. How have you seen this Middle East journey? Where do you see the big opportunities for Adyen in the foreseeable future?
A lot of the expansion that we do nowadays, already for quite some time, starts with a lot of our existing customer base. We're quite significant in size, and that means that we have a lot of global customers that work with us that are pushing us or are asking us, hey, can you help us in country X or Y? And we're basically constantly doing the exercise. Where's the demand and where's the biggest impact, and then looking at what can we do, how hard is it to build something, and that's basically the dynamics that drive us to expand into new countries. So that's something we did that drove us so many years ago to decide like, hey, UAE is something that a lot of our customers are really keen to get into, and how can we support them. So that's where you then start. You start working with a lot of these global customers, whether it's many of the US West Coast digital tech leaders. We work with almost all of them, or whether it's the Chinese companies that are dominating global commerce. There's a lot of these companies, a lot of retail, of course, relevant for UAE. So that sets the first years, that's driving a lot of work, and you build a solution, you launch with them, and you start to do more and more business. It's a bit easier way to grow because we already work with them. So for them, we localize the solution, but the basics in how we work, the reporting, the interfaces, the people you deal with, that doesn't change. So it's a nice way to expand. Once you do that, then at some point, okay, the solution works, it's proven, and you start to get more and more local. You start to build the local team out. You start to work more and more with local merchants, and that's something that over the past since we last spoke, we've seen a lot of success with more local players. Indeed, like you say, some of the local leaders are now working with us, which is fantastic for the team, and we'll continue to support both the international customers as well, local. That goes hand in hand. We have a lot of emphasis on physical point of sale. Fantastic opportunity in the retail paradise the UAE presents. So lots to do for us, and we continue to invest.
Well, I guess the one question everybody wants to ask you: when are you planning to enter Saudi Arabia?
Yeah, when we do, we'll let you know.
Fair enough. Now, there's a very interesting thing which is happening in the UAE, and I don't know if you have a point of view, but let me ask the question. So obviously, Brookfield, which had previously invested in Magnati, which was spun out of FAB, which is the biggest bank, has now obviously, completed their acquisition or their investment of Network International, and I guess the writing is on the wall. They're going to bring these two together. Somewhere in the region of 60 to 70%, ask whoever you want to ask, of the market share goes to this one unified entity, right? Yes, they've got a few other banks which are playing in the peripheries. acquiring licenses are becoming more easily available. At least that's what we hear, right? And there's a massive amount of applications for both PSPs and acquiring licenses, from what I gather when I speak to sources in the central bank, obviously unofficially, right? If I take a step back, how do you see this consolidation between these two fairly significant giants, which I think were number 1 and 2, right? What implications, if any, do they have to Adyen's strategy in the UAE?
Yeah, no, I'll answer it a bit. I don't have the level of detail in locally in the market as my colleagues there do, but we have some real serious experience with consolidation, and I think consolidation has been the way to grow in payments for a long time, and has been like the playbook for a lot of companies in terms of growing, because in payments, the general idea is payments is a volumes game. The more volume you can create, the better position you can create to access lower cost base, have better negotiation power, and lots of efficiencies. A bit of a traditional economic model, you can say, about economies of scale. I must say that's been a model in the payments industry for growth for the past 25 or 30 years. And sometimes it's a model which is the only model available for certain companies, because they're looking to combine companies and find a fast way to scale. We have a very different idea, and the reason is that in the past we had a previous company, like first generation payments platform back in end of 90s, early 2000s. Very first generation, but it was an internet payment solution. It got acquired by a large bank, and they bought a few other payments companies and combined it with their banking payments business with a view to really grow to a significant volume, and then decided, let's try and merge it all together into a single platform, because of course that's where the real value comes. If you have multiple functional platforms, try to make it one, because then for customers that's much better. Turns out to be incredibly hard to do that. Super difficult. 2 operating platforms that have live customers processing transactions, well, try and combine it. Incredibly hard. So what you see with a lot of these acquisitions or consolidation moves, that in many cases they continue to run as standalone because it's simply too hard to combine it. And you still have certain scale, but the customers suffer a bit, because the customer, they're being told, well, we also now have this. If you need it, you have to connect to this other platform we have. Or it can be that they try and merge it together and have connections on the back end, but still they're 2 separate platforms. It has a lot of functional, operational challenges. So we very much believe in everything on one platform. It takes much more time. It's a longer path to getting there. But in the end, our customers really prefer that, and that's why we can have solutions around data that I talked about earlier. I don't know exactly what the specifics are here. There's different ways to go about it. We believe in the other model, which in the end we think is for customers.
No,
better.
I share that view because I've got to be a bit careful what I say when I say it. But I personally think you could land up with massive customer leakage. In this merger, and obviously I'm not privy to the underlying business case which justifies the investment that is, but having been in the world of M&A, and not just in payments but across just financial services, the reality doesn't turn out to be what gets written on a piece of paper in terms of what justifies the investment. Let's shift. I'm conscious of time. It's sort of last few minutes. Obviously, coming back to the the evolving world, we have this very interesting sort of, I may say, digital assets world which is coming around with whether it's CBDCs, and some countries are going with retail CBDCs, right? Whether people like it or not. There's also the emergence of tokens, stable coins, alternative sort of form factors. Now, I could take your view from what you said earlier, which is if it seeks adoption, we'll support it. Right, that's sort of the most simpler way to look at it. But if I don't ask you from an Adyen perspective, but more of a payment practitioner's perspective, right? Do you really see these new form factors or payment types or whatever they want to be called? Do you actually see rapid adoption, or these are going to be adopted by certain segments of the economy and society? And, in the initial instance, it'll remain narrow unless governments really push. And I think that's where the retail CBDC comes in, where, and again, is there going to be a resistance against it? Because there's all kinds of, privacy. It's kind of, a lot of people are like, hey, I don't want the government knowing everything about myself, and especially on the CBDC, so on and so forth. How do you as a payments practitioner see the emergence of these new formats of payments?
Yeah, and I think from my perspective, what I see myself is there's, of course, a few things in the world of payments that are hard, that don't yet have a solution, that people have been working on for a long time, or are still very, very hard to fix. And one is, true global distribution of funds, like sending money cross-border, especially cross-continents. Incredibly expensive, difficult, difficult, takes a long time, if possible at all. Now, of course, there's all these cases that are worked out within the existing infrastructure, but clearly an area that can be so much more efficient. This might be a way to tackle that. And I think another element, which we touched a bit upon on the PIX and UPI discussion, like cost of payments, is still fairly high. Now, there's all sorts of interests there, so hard to really change it overnight. But again, if you ask any large company, like, look at your payment cost. For large digital businesses, payments can be in their top 5 of highest cost, because of the cost that you bring with cards, etc. So there are certainly areas that can be improved. And is this the solution? Time will tell. As we said earlier, it's going to take time. Lots of time. But
I do. And I think, in a way, with all due respect, I think with a lot of this, I think a solution is chasing a problem. I think on the cross-border side, wholesale cross-border payments, I think there are massive inefficiencies. And I think that's kind of where I felt the real focus should be. I think there are better and more efficient ways to solve, I guess, the retail domestic payment segments. I think, forcing these down people's throat isn't great. Last question.
No, I agree.
Last question, secret sauce question. So what allows Adyen to continue to differentiate and stay ahead of the curve?
I would say 2 things. So number one is, let's say number one is in the business model and the focus we have. We focus on enterprise customers, and we very clearly have a model where we are one-on-one aligned with our customers. We don't introduce any conflict. So we're not adding a payment method, or we stay laser focused. What we build is for our customers. Everything we do is in their interest. We're always aligned. And that helps us a lot. Now, then with that, everything on a single platform, as I talked about, is a real core principle of keeping things simple and providing the real value. And then the second thing is really about the culture and the people. We take a huge amount of time to make sure the people that we bring in fit our way of working. And that is a culture of no ego, collaborative people, very ambitious, driven, smart people, but team players, no ego type of people. And that's something we're very focused on. And we try to do everything we can to create an environment in the organization that supports collaboration. So very simple things as one P&L. So we avoid that there's lots of internal debate and discussions about where this revenue needs to be booked. We don't care. Our customers, that's what we care about, and we'll support them. These sort of things are really important. So the people in the end, they make up.
So Roelant, let me tell you, I went back to check the question I had asked you 2 years ago, right? Yeah. This is commendable, because you said, well, most of these things the last time. You talked about core focus on enterprise customers. You talked about no conflict with the customer and building for what they needed. You talked about the single platform, which you guys have remained wedded to, and you mentioned about the team and the people you tend to hire. Obviously, this time you've added a couple of more sort of, I guess, explanations of what that really means, but that's important. And I think that's very critical. I think a lot of people don't understand that people can change their strategic the way they implement their strategies, but the core values, and I think what you've just talked about to me are sort of core values of differentiation. I think should not be changed just for the sake of desperation, right? And I think with a lot of businesses, they forget the difference between the core values of their strategy and what they need to, I guess, fix at the edges, because you're right. How you compete in Brazil will be different than how you compete in Malaysia versus how you compete in the US. But that's more in terms of the interpretation of the strategy. So you are on money, sir. I did check. I actually have it written here, right? I just wanted to check that. Well, this was not catching you out. Roelant, thanks a lot. I really appreciate you sort of dialing in from Amsterdam. As always, insightful, and as always, I'm thankful to you guys. We made it this far. Hopefully I'll get to see you here or in sunny Amsterdam, but hopefully sooner rather than later. So thank you, sir.
Awesome.
Thank you.
No, my pleasure. Thanks for the invite, and again, congrats on everything.
Excellent. So, ladies and gentlemen, that was Roelant Prins, who's the Chief Commercial Officer of Adyen. He is a second-time guest, if you might you want to refer to it. He was there at the end of the first season. We did a special episode. So with that, I'll say goodbye, and I'll see you next week. Cheers. Bye-bye.